head and shoulders pattern. Have you ever wondered how it works? What is the psychology behind this pattern and why everyone is so afraid of it right now? In this video, I will dive deeper into all the technical details of the most popular price action pattern that calls head and shoulders. This is the pattern we're forming right now on the Bitcoin charts, on Ethereum charts, and on other altcoins. I don't want this to play out, but if it does, as I mentioned in my previous video, I'm hunting for those dip buying opportunities like a wolf. So let's get straight into this illustration, and then we will go straight into the live charts and we will see a live examples from the past. So I want to start talking how to identify and when to start identifying that this could be our potential head and shoulders pattern. But I want to start talking about this simple concept first. So here it is, head and shoulders pattern. On the left side, you see the head and shoulders pattern. We have a left shoulder, the right shoulder, and in the middle we have a head and a beautiful neckline that holds us as a support. And by doing all those technical analysis through all those years and doing my research and backtesting from my previous trade about head and shoulders pattern and using all sorts of different information online, I came across that this pattern has like a 80 to 81% success rate. So if we form a head and shoulders pattern, it doesn't mean that it's going to play out bearish as it's supposed to play. So there's always a chance for us not to play out this pattern and not to see that sharp movement to the downside, or maybe a small movement to the downside until we're going to start forming something bullish like a falling wedge pattern, etc. But by using all those using this simple concept, the head and shoulders pattern is like a live example here. We see the left shoulder, the right shoulder, and in the middle we see head. In the middle here, in between all of those charts, we see a neckline that acts as a support. And the head and shoulder pattern is a chart formation that appears as a baseline with three peaks right here. We see those three faces, 1, 2, 3, three peaks. All right, three peaks, the middle peak being the highest. So as we call a head. In the technical analysis, a head and shoulders pattern describes a specific chart formation that predicts a bullish to bearish trend reversal, or in other language, we're shifting from the bullish market structure into the bearish one. Here's how head and shoulder patterns work. So we see the left, talking about the left shoulder. This part of the pattern begins with a high point followed by a decline to form a trough, which creates a shoulder. All right, a head that we see in the middle. This is formed when the price rises from the trough to form a higher peak, the head here in the middle, and then declines back to the baseline on the neckline that we call like this baseline, a neckline, our potential support. Right shoulder, following the head, the price rises to form the third peak, which is lower than the head and usually similar in height to the left shoulder, then declines again to the neckline. Simple concept about head and shoulder patterns. You can even ask ChatGPT what it is. So about neckline, about the breakout and the volume, we're gonna start talking when we're gonna jump into this illustration. So let's jump straight into this illustration that I prepared for you. So in this illustration, I will try to show you when you have to start identifying that this could be our potential head and shoulders pattern. I mean, as I mentioned you before, this is not like 100% guarantee you that we're going to see that sharp movement to the downside, but the data and the whole information is right there in front of you. You cannot deny that, and you have to be cautious if you are a bull. And that's what we're forming right now, as I mentioned before, on the Bitcoin and Ethereum chart. So we'll see in the near future how it plays out, or if it doesn't. But first of all, let's just start talking about our potential head and shoulders pattern that we see all over the charts right now on the altcoins, Bitcoin and ETH. So let's just start talking about left shoulder, all right? First sign of weakness. I'm going to call this phase 1, first sign of weakness. What happens? Prices are going up. The market is in an uptrend and we're extremely bullish. We're bullish, we're buying more, we'll keep longing the, I don't know, Bitcoin, Ethereum, it doesn't matter. At some point, they reach a peak and start to fall because some of the traders want to sell and secure their profits, and the sellers are in control and start pushing the price to the downside. Then the price rises again because others still believe that the trend will continue. So the FOMO starts to hit in. We're start to believe that we're still gonna keep climbing towards the upside. And after breaking through the previous high at around here, after breaking, retesting, finding probable, as we see here, we found a demand zone and continue pushing towards the upside. We form a head. And I mean, when we are at around here, when we start printing that potential head, all I'm going to say that after breaking through the previous high, as I mentioned you before, we expect that the price to climb towards the upside all over again to the upside. No chance for our naked eye to identify that this could be our potential head and shoulders pattern, and I'm going to delete that. So there is no chance for me to identify that we could print a head and shoulders pattern in the near future. All right, after getting this rejection, so there's like a phase 2, the peak of excitement. All right, I'm going to call it a peak of excitement. So what just happened? Let me just make this in the middle. All right, so peak of excitement. What happens? Price goes up even higher, and the FOMO starts to hit in. Oh my God, Bitcoin is gonna go to the $200,000. So no way it's gonna go lower. We're only gonna go up. Price goes even higher, and higher. Then the first peak, reaching the highest point, as we see here. So there's a probability for us that we reach our peak at around $107,000, $108,000 on Bitcoin. This is just an example. I don't say that we're gonna see this is the end of the bull market. I do believe we have a second leg up, but we'll see. Only probabilities, no predictions. So after this, the market drops again because more people starts to sell and securing their gains, and we create that sharp movement to the downside. Sharp movement to the downside identifies that we created a lot of supply here, and I will show you most definitely on the charts. Just bear with me, please watch this video to the end. This is where everyone gets excited. Some buyers jump in because they're afraid of missing out on the rally. This is the FOMO phase. We're afraid to miss the rally, and we're still pumping our bags so hard. We're investing, we're longing with irrational leverage. We don't care. We are in that FOMO phase, fear of missing out. But smart and experienced traders start, or let's just say investors, starts selling here because they believe that the market is too high and may drop soon. And this is just what we see right now. We are in an extremely overbought territory, and smart traders and investors are securing their gains, and they don't care. They made enough and they don't care. They're securing their gains, and sellers starts to be in control and push the price to the downside. That creates this massive supply zone. And after seeing this sharp movement to the downside, all I'm asking myself, after seeing this pullback, usually a sharp movement to the downside, when we form a supply zone at around here, I'm starting to ask myself a question. Is it possible for us to form that bearish pattern, head and shoulders pattern, which is bearish, right? So we're going into the third phase. After creating the supply zone based on the, let's just say, price action charts, or let's just say supply and demand. Let's just, like, even if I'm gonna start using the simple Fibonacci retracement tool from the swing highs to our swing lows, this is just an example. Don't get this don't take this serious. But after forming the supply zone, we usually retest, as you know, supply and demand, and we're creating head and shoulders pattern, right? So we're retesting the supply zone at around the golden zone, or maybe even a little bit higher at our premium zone, a discounted zone. All right, so let's just talk about this right shoulder. This phase, I'm gonna call it losing momentum. All right, what happens after the price falls from the head? It tries to go up once again, but this time it doesn't reach the same high. We get rejected from our golden zone. Let's just call it a supply zone. I'm just going to use as an example the Fibonacci level that identifies us a, let's just say, potential supply or demand zone. It depends from if you're drawing from the top to the bottom or from the bottom to the top. If you know, you know. If you remember my previous video about the Fibonacci levels, this is a sign of weakness. Yeah, this is the sign of weakness. The price then drops below a key level, called a neckline, confirming the market is now in a downtrend. If we're going to see clean breakout and movement to the downside, all right? So why it happens? Like, what's the psychology behind this? Confidence fades. People realize the market can go any higher. They realize that the market can go any higher, and fear starts to take over all over the market. Many people start selling. Many traders, investors starts to sell, and buyers don't show much interest anymore. This causes price to drop even further. So this is a psychology, basic psychology on head and shoulders pattern. Right shoulder, like losing the faith into the asset that we're investing. The second peak, like, usually tells that we are in the FOMO phase, and the first one, well, I'm starting from the other side, but still, the phase 1, phase 2, phase 3, and the first phase is telling us that we're moving to the upside. We are still in the uptrend. Rejection, finding a demand zone, start to build our long positions or start to investing all over again. FOMO phase, rejection. We couldn't get even higher, and the best part is that for those who invested, they don't sell here. I'm not saying that you should, but most of the traders and investors, retail traders and investors, they don't sell because they saw that peak and they want to reach that peak all over again. They want to see the price goes even higher, because how many times you caught yourself by saying that, oh my god, if the price is going to go higher at around those levels, I'm definitely going to sell it. I'm definitely going to sell it, and I'm going to walk away because I'm in a massive drawdown right now. I'm in a massive loss. Wrong. We form a right shoulder and then continue moving to the downside. A massive drawdown and the fear on all over the market. All right, so keep an eye and start identifying those potential head and shoulders pattern, because this is like a great indicator to understand where the market could go in the upcoming days, months, or I don't know, in the near future. So let's jump straight into the live charts and let's just see on, I don't know, I'm going to take a look on Bitcoin as well, on ETH, and I'm going to take a look on probably gold as an example, a commodity that we're going to start comparing like head and shoulder patterns, what just happened in the past, how it was formed. So yeah, without further ado, let's jump straight into the charts. I'm going to delete this. All right, so we are on the Bitcoin chart, 12-hour daily time frame on the Bitcoin charts, and as I mentioned you guys in my previous video, we formed this head and shoulders pattern, a potential. I mean, we see the left shoulder, the head, a FOMO phase when everybody started to scream that we're gonna go even higher, we gotta go even higher, and then we got rejected from here, printed and formed a right shoulder. Just like using Fibonacci, we at around golden zone, at around this supply zone, we got rejected. If you remember, of course, my previous video, I thought we're not gonna lose this bullish momentum, and after retest at around this demand zone, we're gonna go higher. But yeah, I was wrong, who cares? But looking on the bigger time frame, we form most definitely beautiful head and shoulders pattern. And right now, everyone is expecting that this neckline, this potential, let's just say this whole demand zone, this whole support zone, will hold us. But yeah, I would love to see some kind of movement and start forming a, let's just say, falling wedge pattern, clean breakout, and then another movement to the upside, because yeah, I want to stay bullish, but I cannot deny that, and I cannot like ignore this data in front of me, a head and shoulder patterns, and it has like a 81 to 80 success, like let's just say a win rate, that this could play out. And if this plays out, I mean, I'm not actually expecting a sharp movement to the downside, because yeah, sometimes we can see fake outs and then like maybe retest this supply zone and then even then push the price, because I don't believe that we're gonna see like a sharp movement to the downside. I don't believe that, but maybe I'm wrong, we'll see. Then after some kind of retest, after a small bounce, maybe we're gonna get that rejection from the supply zone, and still we're creating a lower highs, lower highs, lower highs, lower highs, and then clean breakout through this neckline. And then we can start, I don't know, retesting your futures SME gaps, all of those gaps, all of those demand zones from the previous. I mean, when we compare the let's just say liquidity heat map, where all of those orders are sitting at, and then we can go lower and, well, yeah, in general, start forming something down downtrend movement and clean breakout movement to the upside. But still, I cannot ignore this head and shoulders pattern. I don't see this playing out, but we'll see. We cannot ignore this, that's for sure. And let's jump straight on the daily time frame. Let's just take a look on the past. Where's my, what just happened, for example, with the Bitcoin, where I can see the like potential head and shoulders pattern that we discussed in my previous video. I can see right here a potential head and shoulders pattern. Yeah, neckline movement to the downside, not that harsh, not that crazy movement to the downside, but still it plays out in some way. Then on the bigger time frame, look at the history. Let's just say we printed a left shoulder. We reached our FOMO phase, if you remember, $68,000, printed a right shoulder. Not that horizontal and perfect neckline, but still ascending trend line that acted as a support, breakdown, movement to the downside. Even we see here on our previous, let's just say from 2021, 2021 bull rally, left, head, and right shoulders. Boom, movement to the downside. Not that perfect neckline, but yeah, because the market is volatile, so don't expect that the head and shoulder pattern will be very like from the book. So don't expect that. So yeah, head and shoulders pattern play out perfectly. I'm not gonna go further in the past, but let's just take a look on ETH. All right, where I can see the head and shoulders potential head and shoulders pattern from the, I don't know, here, movement to the downside. All right. Here, left shoulder, head, let's just call it a right shoulder, and after getting rejection, yeah, let's just see this neckline, ascending trend line that acted as a support, movement to the downside. Even here, with this sharp movement to the upside, we went down. So in general, this one identifies that this is like our bearish indicator. This is like a bearish indicator, and we have a high chance, a huge probability to go even further, I mean to the downside, to see a lower price. And again, if we're gonna see a lower price on ETH, on Bitcoin, I'm hunting those dip buying opportunities like a wolf, as I mentioned you before, and I'm buying more, so I'm investing in what I believe in. But yeah, head and shoulders pattern. And let me just jump straight into a gold charts, daily time frame. Of course, I'm gonna go on the lower time frame because I saw something very interesting. Look at here, look at around here. Head and shoulders pattern. Left, head, and the right shoulders. Movement to the downside. What else do I see? All right. Left, head, right, movement to the downside. Not that perfect, but still. Left, head, right. So this like behind psychology, behind the head and shoulder patterns works. It works. It has like a high success rate that this will play out, so keep an eye on it. Let me just jump back on Bitcoin. Let me just take a look what is going on right now. So Bitcoin, if this head and shoulders pattern plays out, all I'm seeing that we can fill this gap, this massive impulsive movement. All I'm seeing like the $80,000, 79 probably, and 76.6 at around here. It is like a strong probability to retest those levels. Well, it's just the way I see the market. So do your own research. Comment down below if I'm wrong about this, if you don't believe that the head and shoulder patterns has that high success rate of playing out. So comment down below your opinion. Do you like head and shoulder patterns? Personally, me, I hate that pattern, so I'm only like relying on the supply and demand most of the time, trend lines. But after printing and forming that right shoulder, yes, in general, I see the whole picture, what is going on in the market, that we formed a head and shoulders pattern. So I can expect movement to the downside. All right, so yeah, that's pretty much it. Don't be greedy, secure your gains, be smart, yeah, and stay safe. And I'm gonna see you in the next one. Peace out.